Mm-hmm.
And one of the ways that you can mitigate against that or kind of mimic that is to maybe double your contract size, but plan to be in the trade for a much shorter period of time. And I showed on the call there how like, you know, a trade where I doubled my number of contracts from like 10 to 20, but I only stayed in the market for like 40 minutes and got about 33% of the profit as opposed to trying to get 50 plus. And checking in here, I was going to post it in Discord and saw there was a
Okay.
question from Ranjit from
Mm-hmm.
yesterday's teaching and everything. So I thought I had a chance to chat about that. Number one,
Mm-hmm.
got in a little later than typical, and that was just because some work related stuff. Uh,
Mm-hmm.
didn't love the expected move, and kind of VIX coming down a little bit, and you know put on a relatively smaller position. Like it wound up kind of filling where it was kind of more like two-thirds of the profit was in the put side versus the call side, which I didn't really mean for that to happen. But I
Mm-hmm.
think the way it kind of filled, it was kind of like 65-35, put the call ratio. And I meant to be more like 50-50, to be honest with you. But nonetheless, pretty uneventful. I am still in the trade, trying to eke out this, get that full thousand. You guys may recall a couple of weeks ago, I had a similar position like this in the witching hour. I remember we had that explosion to the upside, and I wound up getting stopped out.
Mm-hmm.
Yeah, so I mean, technically it could happen, but I think we're not due for one of those for a while. So I'm trying to let this ride out. But the bottom line is, smaller size position today. That's kind of another reason why I'm kind of willing to let things ride out till the end of the day. And a little bit of a tie into yesterday's teaching session. So last week, you guys had posted in there a video from TastyTrade in
Mm-hmm.
the zero DTE, and we went over that on the teaching session. And the bottom line is they're not trading, as we classically trade zero DTE. It was a study on managing zero data expiration strangles that were just 20 points away from the money. So these were much closer in, and it was basically managing them at various profit targets. And the key takeaway was if you don't manage them, it's a negative P&L, and like the best P&L came from managing and taking your profits early, like 15% of your potential profit. That was
Mm-hmm.
one of the key takeaways from the study. And a parallel to that I wanted to communicate to the class was, yeah, Brian, you've been on a number of the webinars and stuff we do for new people, and
Mm-hmm.
and one of the ways that you can mitigate against that or kind of mimic that is to maybe double your contract size, but plan to be in the trade for a much shorter period of time. And I showed on the call there how like you know a trade where I doubled my number of contracts from like 10 to 20, but I only stayed in the market for like 40 minutes and got about 33% of the profit as opposed to trying to get 50 plus. And the whole goal was like get out, don't subject yourself to time in the market and try to get your decay on a bigger number if you still have like an absolute amount that you want to try to make. And that was a conclusion I had come to a while ago too. And it just seemed to be borne out by their studies. Although, like I said, they were wind up trading strangles that were actually closer to the money than we typically ever would be, but principles all the same.
Absolutely. Principle's the same because it's Strangle is, same kind of setup for the most part, like an iron condor, especially in a situation like that, because if you're doing it on SPX, you're most likely going to be doing a iron condor anyway, wide like what you teach perhaps, and that would kind of mirror that study they did, and they actually pointed out in there, I believe, that that's what would be the case. You'll be doing something wide instead of strangles because the buying power would just be too much for you to be able to really trade that effectively. um, and I was trying to bring that up right now, but for some reason I couldn't find it in search. But that is a definitely a good video. Made me start to think about, should we have a time frame with how long you stay in the trade? I don't want to, fix something that's not broke. I mean, what you teach in the statistical day trading course has been awesome, and it works, and it still works, and it's been working for years. But that doesn't mean you can't tinker with other different things to see if you can improve it a little bit. And that's what you are always doing, Dr. Metals. And so 15%, a time frame, you stay in the trade, you say, okay, I'm going to be in and out of the trade within an hour, see how that works. I'm not sure how that would work out long term, but it appears their study that would work out, and you would have a 90+% chance of winning or win rate, and you will be positive, over that time frame. I mean, anything else you want to add to that, Dr. Metals?
Well, I thought it was interesting that, the
Mhm.
unmanaged position in their study, that was really the only one I think that was negative. I think all the other ones taking it like 50% profit, 25 and 15, it got better the earlier you took your profit basically, but the worst was like the unmanaged one. And like I said,
Mhm.
I think we're in an era too where like, if you're not really willing to manage a zero DTE, you're probably going to be negative too, you know? So, yeah.
Absolutely, absolutely. You can't get past that in this day and age. When you first started doing it, you could have got past that, but markets
Yes.
change, and you definitely have to know how to manage it, adjust
No.
it, and nurture it a little bit, huh?
Yeah. Now, Ranjit's question here about, hey, yeah, take your profit, get out, take your 33%. But he kind of indicates maybe getting back in again. You can you can get into the market again and flip your funds faster. Maybe you can get another 33%. So in total, we can achieve 33 plus 33 equals 66%. Well, I, what I'm thinking, I would say no. Like if you're able to get out of your initial position on a zero DTE, and like I said, I'd rather see you double your contracts with the notion that you're going to get out earlier and be done for the day, as opposed to if what I think you're doing is like re-entering on that same day. Um, I wouldn't necessarily do that as a rule. I mean, I re-enter all the time, but usually that's after a stop out or something like that. So I just kind of want to make sure we're still on the same page there. I don't know if he's meaning like two separate positions or two
So
separate trades that day.
I think he's probably meaning two separate trades. You do one, you win, then you do another one. But is it? Am I mistaken, Dr. Meadows, that they actually pointed that out in that Tasty Trade
Well,
video that they came back in?
yeah, yeah. See that was that was another kind of interesting thing about that video. They talked about recentering the trade, and what they meant in that video, yes, was yes, you got out, say for instance, at your 15 or 20% profit. And when they say recenter, they mean, yeah, they meant put on another trade.
Hmm.
So you'd obviously have to be even closer to the money and that kind of thing. So that was one big thing about that study that, is very, very different than what I would, advocate for,
Hmm.
I recenter trades all the time, but as I explained on the call last night, that's in response to a trade going against me or something like that.
Correct.
But not after I've won. So yeah,
Yeah, I would lean towards what you're saying is that I wouldn't be recentering anything unless I had to due to some type of adjustment requirement. But I'm not jumping back in just to jump back in. To me, that you get into that gambling field that you have to always be trying to get in and out. And to me, you're going to leave yourself open for bigger hits.
correct.